Okay, welcome back to the Rise and Fall Trading Hub. This is part 10 of 18. I'm David, and I want to appreciate you so much for being with me from part 1. We are now halfway through. In this part, we are going to analyze the rise and fall market using a bit different method, different from what you have been looking at. This method will work whether you are trading the binary, that is the rise and fall, or the normal forex, the currency pairs, the volatilities, or any kind of trading. This method will work. So subscribe to the channel and like, share, and comment. Click the notification bell so that you are notified every time something new drops. Now, we are going to look at analyzing the market using a very powerful strategy, that is the candle patterns. Today we are going to look at one, that is the bullish and the bearish engulfing. And my objective is to show you how this pattern is formed, what it means, and what to look for when you are using it to trade. And if the market favors us, we can enter a trend, manual trading to start with. So let's look at how the bearish and bullish engulfing patterns form. Now I'll start with okay, let me start with the one I can see here. We'll start with this one. This one is a bearish. So how is it formed? Now, bearish engulfing candle pattern is formed actually from two candles. It is formed after an uptrend. So let's say there is an uptrend, and then after an uptrend, a candlestick is formed, because a green one is formed. Let me make it green. A green candlestick is formed. Then it is followed by a red one, Now, the red one that is formed, that is the second candlestick, completely covers the first one. Okay, it completely covers the first one. Let me make this one a red. So this one is bearish. So on an uptrend, and then after the uptrend, there's a green candlestick is formed, and it is completely covered, that is, it is engulfed by a red candlestick or a bearish candlestick. So, and I'm talking about the Mbonde. The Mbonde is, of course, it has a wick. I have not drawn the wicks, but concentrate on the Mbonde. If the Mbonde is completely covered, then this one is what we are calling a bearish engulfing. And what this means is that this market is going to reverse. So this candle pattern is a reversal candle pattern. So there is an uptrend, and green candle is formed that is completely engulfed by a red candlestick. This signifies a downtrend. Let me give you an example. Now, if you look at this part here, you realize that there is an uptrend here. Can you see? This is an uptrend. Then there is a green candlestick formed here, and it is completely engulfed by this red candlestick. So this is a bearish engulfing candle pattern, and it shows that the market is going to fall. So that's why you can see at this point there was the market reversed. So the bearish, actually the bearish and the bullish candle patterns, they are reversal candle patterns, especially if they form at the support or resistance. So, but for the bearish, this one, it forms at the resistance, but in some cases, it can form along a trend. For instance, this is a downtrend here. Then along this downtrend, there can this bearish engulfing can form to signify the continuation of that trend. To signify the continuation of that trend. So it can also happen along a trend, but majorly it forms to show that there is a reversal in the market. So this is a bearish engulfing. Now let's look for a bullish one, a bullish engulfing, and I want to restrict myself to those that are very clear for you. I'm bullish engulfing, and I'm saying you look at the body. Look at this part here. So there is a bullish engulfing is formed after a downtrend. Then after that downtrend, two candlesticks form. The first one, let me show you also. So after a downtrend, and then a bearish candle pattern is formed. After a bearish candle pattern is formed, or a red one, it is followed by a big green candlestick. Let me show you that. Let me make it green. So this shows a reversal in the market, and it signifies that there is going to be an uptrend. So it's the opposite of the bearish engulfing. Now this is what we are calling bullish engulfing. It's what we are calling bullish engulfing. Now let me use this actually to show you what I meant when I said it can also form along a trend. So looking at this part, there is a bullish engulfing, then the trend reverses, it becomes a rising market. Then if you look at this part, you realize that there was a red candlestick that was formed, and it was engulfed by a green one along the trend, showing the continuation of that trend. Now that is the bullish and the bearish engulfing. Maybe I can go back and get you more examples before we look for a market and see how we can use this one to place some trends. Look at this. There is a downtrend. Okay. There is a downtrend, and then there is a bullish engulfing at this point, showing a slight reversal in the market. Let me look for another one. So to those of you that are not new to this, okay, let me first of all look at this one. There is an uptrend, then a green candlestick, a red candlestick engulfing the green one. This one is a bearish engulfing, and the market reversed. Now if you are a beginner, kindly be looking at where there is a clear trend. For instance, a clear trend like this. So be looking at those scenarios where there is a a clear trend. There is a downtrend, a red candlestick, a green candlestick that totally covers the red one. So this one is a bullish engulfing candle pattern. I hope you understand what I mean. So having said that, I'm saying to those of you that are not new to this, I want to say that sometimes the bullish engulfing and the bearish engulfing candle patterns can be formed by more than 2 candlesticks. Let me see whether I can give you an example of that. Okay, an example of that. I can also look for another market. So make sure you practice this using your demo account and see how it goes. Let me maybe change the market here, the volatility. I show you more examples. See, this one is an uptrend, then a green candlestick which is completely engulfed or covered by a red one. So this one is a bearish engulfing. That's also a good example. So be looking at those points where we have a clear trend first. And if you want this one to work the best for you, make sure that you are trending at the support or resistance. That one will be a confirmation. Remember, you have dealt with support and resistance. So when a market reaches a support or resistance, there is a high chance of it reversing. So what I'm saying is that now you can combine that with this. This is a falling market and downtrend. There is a red candlestick formed here, followed by a green one. So this one is a bullish engulfing. It was a slight one, but it was also a bullish engulfing. Even this one is a bullish engulfing. Of course, there are other candle patterns. We will be looking at them so that you see exactly how they form. I want to show you an example of where the bearish or bullish engulfing is formed, but not with 2 candlesticks, but with more. And I'm looking for clear points that can show you that. And then we will look for a market, see whether we can enter a trend using this so that you can see exactly how it is formed. So here there is a downtrend, then this candlestick did not completely cover this red one, but this next one covered it. So this one is also a bullish. This one is a special type of bullish engulfing, but it is formed by 3 candlesticks. This red is completely covered by these 2 greens. This one is also a special type of bullish engulfing. It also happens with a bearish engulfing also. Perfect. This one, the green one, was completely covered by this red and this red. So this one is a bearish engulfing. But if you have not done a lot of practice, especially with those 3 candlesticks forming the bullish and the bearish, kindly just concentrate with the one that is formed with 2, just 2, especially if you are a beginner. Well, I hope I've explained that. Now let's look for a market, see whether we can place a trend, we'll look at manual trending first and see how you can execute a trend. And if we are not lucky, then I'll just explain to you what to look at. So let's start looking for a market. And we have said you concentrate on points where there is a clear trend. Of course, an instance like this one, this shows yes, bearish and curving, but we want to concentrate on where there is a support or resistance for better results. Of course, if you are not a beginner, you can place trends fair anywhere. So this one was also a good point for bearish and curving. We will be learning these candle patterns one by one, and then make sure the only thing I request from you is once we learn something, make sure that you practice that a lot. Do a lot of practice. Let me do a lot of practice with it. That is 25 1S. Let's look at 25. This one is bullish and curving, but it is formed by two candlesticks here. Okay. By the way, bullish and bearish and curving patterns are common. They are common. And very profitable for that matter. So 25 1S. Then 75. So I expect that you know how to analyze the market using support and resistance. That's why I've not gone back to that. If you have not watched that, that must be part 8 and 9. I think I dealt with support and resistance. So you can familiarize yourself with that. If you have forgotten, you can go back and rewatch that, because you will be using it here also, because I've said this bearish and bullish and curving candle patterns work best at the turning points, at the support or resistance. So if you analyze your market, like this one is 5 minutes, let's change to 1 minute. But if you analyze using the 5 minutes, of course, when you are placing your manual trend, I hope you remember how to do this. If you don't, I think you need to watch the earlier parts. I covered that manual trending. In fact, I also covered the manual trending using support and resistance. I can't remember which part was that. So if it's manual trending, you come to the Rift render, and then click on accumulators, scroll down to rise and fall. So you can choose the time frame here. We want this to be candles. Let's say we want 1 minute, for instance. So you set it up like that. Okay, the timer is here. So you come back now and you get look for a market. Let's change this to 1 minute so that we see whether you can get one. 10 1S. 10. It's a simple strategy strategy, by the way, if you understand it. For instance, here we have a support at this point. So if this comes and taps this point, and there's a formation of, in this case, it can form a bullish engulfing, then immediately after the end of that second candlestick, we can enter a trend for 1 minute. So, but the best is 5 minutes. You can use any that you are comfortable with, but I like using 5 minutes. So let's look for a market, and if we can't find a market, then I'll show you theoretically how to place a trade. 25 1S, then 25. I'm recording this at almost midnight, so I don't know whether I'll get a market, but let's keep on looking. Okay, 50, then 75 1S, 75 1S, 75. So if you're into MT5, MT4, the Forex, this one is also a very, very profitable way of analyzing your market, especially if you are using higher time frames, of course. Maybe once I'm done with the rise and fall, we can start another series for the Forex. But that depends with you. If you want me to do that or to do the digits, well and good. So like this candlestick now, if it closes above, yes, if it closes above this red one, we are going to enter for a short rise, just a short one, because this is a bullish and engulfing. This is what? The 100. Try using the 5 minutes. Of course, I told you this one requires a lot of patience. A lot of patience. It did not. Okay. So let me just explain to you how you enter a trend. Let me see whether I'll show you how you enter a trend. Pay attention. Okay. So, and I've said you look for a clear, where there is a clear trend. So for the purposes of explaining to you how you enter a trend, allow me to use this part. And I want to assume that there is a long trend. Let's say there is a long downtrend here, like that. Okay, it's a long downtrend, and this red candlestick forms, and then it is covered by this green candlestick, which means this one is a bullish engulfing. Immediately this second candlestick closes and you realize that it has completely engulfed the red one, you go to your manual trading and you click rise. This is 1 minute. Let's look for 5 minutes. 5 minutes, and 5 minutes. Let's look for the market. Where was it? Let me use the one I was explaining with. So look at this. So there is a clear uptrend, and then this one is formed, a green one followed by a red one. Then immediately this red one closes, and you realize that it has engulfed the green one, meaning that this is a bearish engulfing. You enter a trend for a fall. So you know the logic is, if this candlestick has closed here, if it has closed here and this one is starting here and this is bearish engulfing, it means that this candlestick that is being formed here will close below this your entry point. So let's say you enter this trend at this point. So automatically this candlestick is going to close below your entry entry point, which means at the end of this candlestick you will be at a profit. That is in manual trading. I don't know whether you got that. Let me explain the same using the bullish engulfing, and I want you to do a lot of practice with this so that you see how it forms exactly. This one is also bullish engulfing. So this one forms immediately after you enter a trend here. So after this one closes, so you are trending in this candlestick, you will be at a profit. So simple, so simple. First of all, try the manual trading first. See how it goes. Of course, the more we learn about other candlestick patterns, the more this one will make sense to you. And when you combine so many strategies, of course, you'll be more profitable. The key thing is doing a lot of practice. Look at this immediate trade. So here you want to enter a trend here after this one has been formed. Then you enter a trend here. Of course, this one closed here and you will be at a profit. So that is exactly how it is formed. I'm sorry that we did not get a market, but I hope you understand what I mean. In case you have any question, you can ask. In case you need bots, I'm happy that many of you have requested for bots. I've shared bots with more than 500 of you now. Just ask through the email in the description. That is theriseandfalltradinghub@gmail.com, and I can share as many as you want. Even if you want 100 bots, I can share for free. So thank you so much for watching. The only favor I want you to do me is share this with your friends. Make sure that they also learn this so that we can profit together. Subscribe and give a feedback. Thank you so much, and see you in the next one.